Well, a new week starts October 7th. The Market Update Desk with Scott Riley, NMLS 157524. I'm sorry, 157524. Um, Slow day to start the news today, but we do get a lot coming later in the week. I actually have knee replacement surgery on Thursday, so definitely not doing an update on that day and working from home this week to kind of prep for that. We ended last week definitely on a downside for mortgage rates. They crept up, and they've been creeping up for about the last 2.5 weeks since the Fed meeting last month. We've been on an upward trajectory. And with the blowout jobs report number on Friday, it definitely sent a bad signal to the bond market. Now, this week, we do have tomorrow the National Federation of Independent Businesses, which is the Small Business Optimism Index. Then we get mortgage applications and a very important 10-year auction on Wednesday, along with the detailed Fed minutes from the September 18th meeting. Thursday, we get CPI, very, very important inflation data point that we're going to be looking at, jobless claims. Then we get a 30-year bond auction. And Friday, we get producer price index. Now, we have WTI oil jumping above 75.5 this afternoon. There's just obviously a lot of things going on in the Middle East, and that's going to lend itself to some inflationary concerns. That, along with the jobs number, has put the bond market on its heels. We've now breached the 4% barrier on the 10-year bond. In fact, right now I'm looking 4.03 on the 10-year bond. Mortgage-backed securities, over the last week, we're probably up in the neighborhood of 60 to 70 basis points on mortgage-backed securities. That sent us definitely into the mid and upper sixes on mortgage rates, from where we were into the high fives, low sixes. So definitely a reversal of what we've been seeing. There's also one of our followers, Cliff, gave us an update. He did some checking and found that there are 18 Fed speeches this week. That doesn't even include past Fed members that are probably going to comment on the existing Fed members' comments. So we've got a wild week ahead between CPI and the Saturday Night Live entourage of Fed speakers this week. Hold on to your hat. We're hoping that we've hit some resistance on the 10-year bond. We start to come back a little bit, but I think we're going to stay in this trading range for a little while. I don't think we're going to I don't think we're going to go back down anytime real soon. In fact, the betting odds have dramatically shifted for the November Fed meeting from 50 basis points to 25. And now there's rumblings maybe of no Fed cut in November. And obviously we have the election next month. So there's a lot going on, a lot to follow. If you're out shopping for houses, be proactive in keeping up to date on rates, get the information here. Just be out there in the market looking at homes, because there's more and more buyers coming in the market. We've talked about this over and over. In fact, Black Knight came out today, showed last month there was a 0.12% increase in home appreciation. Houses aren't going down. I know it's a challenge for a lot of people, but for a large segment of the population, it's not a challenge. So we have that upward pressure on prices. The longer we wait, the longer you're going to pay. So interest rate's a factor, not the factor when you're looking for a house. So give us a call. We'll run down numbers for you and try to break down everything for you to where it makes sense and help you show why it's positive to look at homes. And maybe even with elevated rates, it may make sense to refinance, consolidate some debt, look at your global blended interest rate, not just on your mortgage, and see how we can help you save some money. Give us a call, 616-293-2189. Thanks.